Hi there, another stock that seems undervalued. That is PayPal. If you look at the stock price, has declined by over 70% from its peak. And some people think that PayPal is a good investment at the current price. And they may be right, if PayPal keeps growing its earnings. And in this video, you'll find out the outlook of this business, and at the end, you'll find out the fair value of PayPal, whether it's a good investment at the current price or not. Let's begin. You can see in this image that revenue is expected to increase from 27 billion to over 40 billion by 2027. And earnings are expected to rebound from 2.4 billion to over 4 billion. Now, there are some important indicators you should follow. First, the total payment volume. You can see that PayPal had about 350 billion in total payment volume last quarter, a growth rate about 10% year over year. They had a higher growth rate in the past, but then it started to decrease to about 5%. And that's why the stock price went down. Plus, there are other reasons. For instance, the growth rate in active accounts has also decreased from 14% to 1%. The good part is that this number is stable. They have about 443 million users. Moreover, you can also see their free cash flow. They made 1 billion last quarter. For the past 12 months, they had about 5 billion in free cash flow. Plus, they have 15 billion in cash, and their long-term debt is around 10 billion. And the good part is that they keep doing buybacks. As you can see in this image, their capital allocation is more focused on buybacks, as the stock price is quite cheap at the current level. Last year they did 4.2 billion in buybacks, and last quarter 1.4 billion. So that's good for investors. And their guidance is that they expect about 4 billion in buybacks, and their free cash flow to be around 5 billion. So it seems that the business is stable and is improving. But the problem with this business is their take rates. As you can see, they are about 2%. I think you already know how they make money. From the total payment volume, they charge a small percentage, about 2%, and that is the revenue. But if you look at the past, you can see that their take rates were higher, about 2.2% and 2.5% for 2019. And as you can see, the take rates have decreased from 2.5% to 1.99%. And my prediction is that these rates will continue to decline to 1% in the next 5 years, and then even more, because there is a lot of competition. Think of Google Pay, Apple Pay, Amazon Pay, plus other small players. And this service should be for free. You can think of this business as sending messages. In the past, they charged us money to send messages, but now they are for free. Same for sending money. I expect that this service will be for free in the next 10 years. This is my prediction. You don't have to believe me. So now they are charging us about 2% for sending money, but I expect these rates to decline more in the future. This service may be for free. You can think of the major players. For instance, Amazon may provide this service for free to attract more clients on their platform. Same for Google and Apple. And these digital wallets will make less money in the future. Now, as there is high competition between major tech companies such as Amazon, Apple, Google, Microsoft is partnering with PayPal to integrate their solution into Microsoft Teams and also on their stores. For instance, teachers will be able to receive payments directly in Microsoft Teams. As Teams is well used in many corporations, PayPal may have an opportunity to increase their market share to attract more clients to their wallet. But I don't expect the rates to be around 2%. They will be even lower. Now let's see the valuation based on analyst estimates. For a 10% annual return, the fair value may be around 28 billion if PayPal doesn't grow more in the future. That may happen if the rates decline even more and they lose more users because of competition. The great scenario, if PayPal keeps improving its earnings, the fair value may be around 70 billion. So the current market cap about 73 billion the stock price seems fairly valued for a 10% annual return. If PayPal keeps growing its earnings, they may come up with new products, other financial services, then this scenario may happen. You can expect 10% annual return. And a normal case, where PayPal may grow a little, the fair value can be around 42 billion, and now the market cap is over 70 billion. So the current market price, you can expect another decline if PayPal doesn't deliver the expected growth rate. So even though the stock price has declined over 70% from its peak, PayPal is still overvalued at the current price. This huge increase happened due to the pandemic. People were expecting this stock to grow a lot in the future. But you saw the results. And as there is high competition from major big players such as Apple, Google, Amazon, and other small players, PayPal has to lower its take rates, which means lower revenue in the future and lower profits. That's why this business is quite risky. You don't have to believe me. Do your own analysis, and after 5 years, you'll find out if I'm right or not. As I said, I expect these take rates to be even lower than 2%. They might be around 1%. And if you have other questions or if you want me to analyze something new, please let me know in the comments.